All right, so what's up everybody? Welcome to the first webinar of the week. It is currently Tuesday, April 16th. Okay, this is a member webinar for a Trade with Text, but I am considering posting it on YouTube depending on how much we get covered. Okay, but I really want to dive back into Trader Psych this week and really next week as well, because a lot of the one-on-one discussions I've been having with members have all kind of been along the same line of, hey, I've been doing well. I think I can do so much better because I'm getting in my own head. And we've talked about this a crazy amount because there's so many resources on the website for this. We've talked about it in webinars probably like 6 to 7 months ago pretty frequently. But I think it's about time that we bring this topic back up because it should be a regular one that we discuss. And I want to kind of just define two things that we're going to discuss and just dive right into them, because for Trader Psych, there are so many different aspects and there are so many different obstacles that you can create for yourself. And you've probably noticed already, but since you're technically an entrepreneur with trading, right, you're investing in yourself and time and money, a lot of the obstacles that you're going to have are just barriers that you have not been able to get through, and you might not be able to get through unless you train yourself to do otherwise. Okay, so we're going to dive right into the first topic here, and both of these go hand in hand. The two that we're going to cover are being a good loser, which sounds kind of funny, but you'll understand what I'm talking about in a second. And then the fear of pulling the trigger. So I'm just going to put fear of entry / exit because that covers all the bases there. Okay, this is the most common one. This is the one that relates to that. It's kind of just a contingency, but I'll show you how they relate and why we're going to discuss both of them at the same time and just instead of one or the other. Okay, but overall, right, first thing I want to jump into is being a good loser. And the reason why I want to start with this is because I think this is the backbone to kind of becoming an emotionless trader. And I know personally for me, and this is my belief, so again, whatever you think outside of this webinar is just a personal opinion. This is just my personal opinion. For me, I don't think it's possible for me to become completely emotionless with every single trade I take. At one point or another, there's going to be an emotion that pops up that tries to change my decision making. Point being, right, you don't want to mask those emotions. You don't just want to numb them. You want to make sure that those emotions do not get a reactive decision out of you. Okay, you can think whatever you want about the trade, but don't let those emotions actually influence whether or not you are clicking something differently. Okay, sounds simple, but it's a very basic concept. Okay, and it's the same thing as something that's dropping very quickly, even though that might not, like, let's say, for example, let's say I'm holding this stock long, TIGR, right, this recent IPO. Let's say I'm holding this stock long. I bought some shares earlier today, and out of nowhere right now it flushes down. Okay, let's say my risk, right, where I had my stop was 20 bucks. That's my risk. But since it had such an aggressive pullback, it starts getting me thinking, right? And it starts getting me thinking that, maybe this thing's going to keep dumping pretty hard and maybe I should jump out. And easily one of the worst feelings when you're trading is when a stock scares you out and then goes back to right where it was, because you can tell that that wouldn't have happened if you didn't let emotions influence your decision making. Okay, so in this case for TIGR, I might sell it because it had a much more aggressive drop than I was expecting, or even a drop at all, even though it didn't hit my risk. And that could allow me to miss out on profits. That could allow me to minimize my profit margin in general on this trade. And if I'm doing this with every single trade that I take, inevitably that's going to add up, right? Because even if it's just 1 or 2% per trade, that's going to add up long term. Okay, so overall, being a good loser is a pretty important aspect of trading. The word that I want to keep referring back to is numb, right? Kind of numbing yourself and not really letting little shifts in price or sudden shifts in price, or even just, your own confidence level impact how you're taking trades. Okay, so for example, the thing that I always go to, and this is the first thing that you really have to take a step past before you can make any other significant milestones in terms of Trader Psych, right? In terms of improving your mindset, is blaming. and I think this is probably the most childish form of accountability and just and not being accountable for your actions and not holding yourself accountable. The reason I say this is because we've probably all learned at a young age to not blame our surroundings for our own failures, right? Holding yourself accountable is extremely important in the trading world, and not just because of the dollar amount attached to each trade or each decision that you're making, but also because you don't really find the root of the problem if you're blaming everything, right? So for example, on TIGR, if it flushes because the market's flushed right there and it moved with it, and I say, damn, I got stopped out of that play, or I got scared out of it because the market's dropped, right? You fully know the risk that you're taking when you enter a trade, right? You know that this stock may or may not have a market correlation. And if the markets do drop on a Trump tweet or a Fed headline or a trade war headline, whatever, right, then that could impact your trade, right? So being able to say, okay, well, the market's dropped, that's just part of it, I knew that risk, that's actually a pretty big step as a trader. And it's really the first one that you need to make to develop a better mindset about losing, okay? So blaming somebody else for alerting a stock and you followed them in. Blaming a group of traders, right, that you're in a group with and you're trading with actively, whether it's a chat room, whether it's just buddies that you talk to regularly, or even just blaming an external factor like a headline or whatever. And sometimes I will say you do get unlucky, but there's never a point in your trading career where you're going to get unlucky that consistently for many losses, like stacked losses. If you think that, then you're the problem. Okay, so first off, you can't blame everybody else. You have to hold yourself fully accountable. Okay, and what this really boils down to is being able to find a balance of confidence, right? And that's kind of the root of everything in terms of becoming a better loser, a confidence balance. And the reason I'm saying balance is because you don't ever want to get too cocky and you don't want to lose a crazy amount of confidence for any of your trades. The bottom line is your confidence isn't in yourself, believe it or not. I know as a trader, you are invested in yourself a little bit. You're investing in yourself, not invested in yourself. Investing in yourself in the sense that you're putting your own time and money into things. But if you have a crazy amount of confidence, that can turn around and bite you in the ass. And if you don't have enough, you can't actually have the confidence that you need to make big milestones and take risks that you normally wouldn't take, right? And that's really everything that we're doing. It's a calculated risk, whether it's the actual trade that you're taking based off of risk to reward, or, right, whether you're risking some of, the money that you made this past week or whatever it could be, right? Whatever it may be. All right. So confidence balance is a pretty important factor. And, the first thing that we talked about was blaming yourself after you've lost a trade or when you could have made more or whatever it is. This is a pretty important milestone, but this is the ultimate goal here, finding a confidence balance. Not in the sense of saying I'm the best, but saying that my system works. That's the big takeaway, that your system works. If your system doesn't work, you shouldn't have an ounce of confidence. And I hate to say this, right? Because it kind of, takes you down a few notches and knocks you off that pedestal. But if you're saying, I can do this, I can make a lot of money, I like that mindset, but you shouldn't believe that until you actually see it. Not see yourself make money, not see somebody else make money, but see a consistent system of making money. Okay? Now the catch here, and this is where we're going to kind of segue into the fear of pulling a trigger in a second. The catch here is that one word, consistency, because there's no standard here for how consistent you have to be in order to trade with real money or trade with big money or whatever. There's no standard that says, all right, you need to win 70% of your trades in order to, trade for a living. There is no standard. Really what it boils down to is your style and your system. So for example, right, let's say my trading system is very simple, okay? Let's say it's just based off of trading steady trends that have a risk to reward. So for every $1 I'm risking, I'm making 2. Okay, it's kind of simple as to what I need in terms of consistency for this to be a profitable system, right? If for every $1 I'm risking, I'm making 2, then I just need to be right a little bit over half the time. Okay, 51% of the time. That's it. So if I'm searching for steady trends on a regular basis and I identify different opportunities and my risk to reward is 1 to 2, right, or my reward to risk ratio is 2 to 1, then I just need to be right a little bit over half the time in order to be consistently profitable. That's not a sweet spot. That's not where you want to be. You want to be higher than that, obviously. But that's the standard for your style. Okay, so let's say that your risk to reward is 1 to 10 and you don't find that many setups, but when you do, damn, do they pay. Then your consistency does not need to be nearly that high. Okay, let's say your risk to reward is lower, right? It's 1 to 1.5. It's not that good, right? Then your consistency in this case needs to be much higher. And that puts a lot more pressure on you as a trader. Okay, so finding that confidence balance does not come from saying, I'm the man, or watching motivational videos in the morning, or watching somebody else succeed. Finding that confidence balance just comes from seeing a proven system work its magic. Okay? And there's one last thing I want to say before we go into fear of pulling the trigger, and just overall entering or exiting a position. A lot of what you're going to do in terms of being a good loser is how you kind of what your major takeaway is from the day. I'm trying to find a way to put this into words. Like for me, a lot of times I remember the negatives or the last thing to happen to me. I think a lot of humans are like that, right? So again, to go back to being a good loser, because we talked about that confidence balance and that plays a big role in winning and losing, right? But just in terms of being numb to a loss and learning from it, right? Because a mistake isn't a mistake if you learn from it. That's the bottom line. So if you make a mistake in terms of human error or you shouldn't have taken a trade, if you learn from it, it's not a problem. It's the price you're paying to get something beneficial out of that trade, right? So at the end of the day, what really resonates with me, and this is just how I think, and I know this is a normal thing. I know I'm not weird for this. I remember the negatives and I remember the last thing to happen, right? Really just the biggest thing to happen and then the last thing to happen. So for example, yesterday, I had 2 wins and 1 loss, right? What I really remember from yesterday is my win on PCG. It's not necessarily a negative, but it's the biggest thing that happened yesterday to me, the biggest P&L, right? And this is where you have to just turn off the P&L and not think about it, right? You have to think about opportunity. You have to think about how you executed, how you traded, right? Not what the markets gave you. Let's say I don't get any setups today. Let's say I didn't take a single trade. Is that on me? No, that's not on me. If the markets didn't give me any setups, then why the hell am I supposed to be trading? Right? There's no point. Okay? So it's the same concept here, where a lot of times you'll beat yourself up over a P&L or a trade that you did not trade well or you could have made more money on or whatever, and you just take away the negatives. But a lot of being a good loser is not just focusing on your weaknesses, right, on what you did wrong, but looking at what you did right and then doing it again and again and again. Okay? And then the last thing that happens in the day, this is a pretty common thing, just in general, right? A lot of times if you spend a lot of time by a computer or really doing anything, right, a hobby, a sport, anything, the last thing that happens in that game or of that day or of that time period really sticks with you. So for example, let's say I had a mixed day, wins and losses, and then I took a trade in the last 30 minutes and the trade lost. Okay? I'm going to remember it as a losing day instead of a day where I took advantage of opportunities and then one of the trades at the end of the day did not work out, right? You have to think about the big picture, not just the last thing that happened that day. And reason being, right, we've all been there, and this is easily the worst part about being a trader. And I've talked about this a lot, so I'm not going to talk about it more than 30 seconds here because we have other webinars on this. Worst thing ever is when you have a bad day, a negative day, a red day, whatever. Let's say that you could have traded better too. And then somebody that's close to you or somebody you spend a lot of time with goes, how was your day today? He's out there. Reason being, right, the reason why that sucks is because initially, right, my go-to instinct is to say, my day sucked, and be really negative about it and kind of beat yourself up. But in reality, right, if you stuck to your plan, if you stuck to your system, then you have no right to do that. You have no right to kind of hinder or hurt your confidence based off of how your trading went. Okay? If there's room for improvement, say there's room for improvement, leave it at that. Right? Say, I could have traded better, I'm going to learn from it and build off of that. That's a positive mindset. You're not focusing on the negatives, you're not focusing on the last thing to happen, and you're helping yourself kind of reach that milestone of being a good loser. Right? So that even if you have a bad day, it's not really a bad day. And it's not lying to yourself and saying, hey, it wasn't a bad day, it was a good day. It's saying that if it was a bad day, I'm going to learn from it. Okay? Now, again, this does kind of transition into the fear of pulling the trigger. And I know this is what you guys want to talk about. I'm going to be 100% honest, just to kind of simplify this, and we are going to talk about it more in depth. But just to kind of simplify this, I think that overall, this is one of the hardest things to overcome. It is also one of the easiest things to overcome. Okay? The problem with this is that your fear of pulling the trigger isn't just a barrier that you can break through and you're done. It's not a yes or no. Like, have you achieved this? Yes or no. It's not that kind of scenario, right? It's something that you build towards, and it will fluctuate over time, your confidence level. So for example, last week, I think my confidence was probably the lowest it's been, I would say, in like 2 months. I think part of that is like I had some personal stuff going on last week. I had a family emergency later in the week, and that kind of, put me down and made me feel bad. But also on top of that, I think a lot of it was just that we did not get trade opportunities for like 3 days. And then I forced a trade, and there were opportunities, right? But not as many as usual, not the standard. I forced the trade and then I lost on it. So what I took away from that is that there was an opportunity, but then in addition to that, I traded like crap. And I saw a couple of you guys make money, and that kind of plays in to my confidence level, right? As much as you want to fight it, that will fluctuate over time. And again, I still had plenty of confidence. I still thought it was a good week. I still ended the week green. But it fluctuated from my standard, right? Let's say that this is my typical confidence, that it's, pretty high or moderate to high, whatever. Okay. Over time, it's going to sit up here a good bit. And then last week it dipped down, and this week it's back up. Reason why is not because of a P&L, and that's not how you should look at it, right? It's because of the opportunity and how I traded that opportunity. Okay? And this is something that, again, I don't think maybe some of you guys have achieved this and you say, hey, I never have fear of pulling the trigger. Well, that's also a pretty bad thing in the grand scheme of things. But that's going to fluctuate, and you cannot let that fluctuate or impact your decision making. Okay? The reason I say this is because there's one question that you need to ask yourself. Does your system work? That's how this relates back to being a good loser. Is your system consistent? Was there enough risk to reward when you took the trade? If the answer is yes, then you should never have fear of pulling the trigger. This is where there's a little bit of a gray area though, because if the answer is yes, if you know your system works, you've back tested it, you've traded it 1,000,000 times over, but your system has a small losing period, right? As everybody does, whether it's a day, whether it's an hour, whether it's a week or a month, whatever, right? Where exactly is the line there that says, okay, my system's not working and I need to change things? Or where exactly is the line of where we start losing confidence or building a crazy amount of confidence, right? That's kind of the catch here. So personally, I think that the easiest way to look at this is that if you do have the fear of pulling the trigger, or if it's ever starting to hinder a little bit, or if you're really ever just uncertain about a trade, you don't have to trade it. And I know this is counterintuitive to what we're talking about. I know it works against the overall goal of pulling the trigger, right? but there are two ways to do this. You either take a smaller size or you paper trade it. This is the thing that I always get pissed off about, and I'm not going to talk about it too much because I am going to get a little bit triggered over it, no pun intended, in the sense that so many of you guys will reach out to me and you'll say, hey Ferris, like, I've been trading well, I think I can trade a lot better, I missed out on this trade, it was stupid, yada yada yada, whatever, right? Overall, you reach out and you say, I think I have a lot of room for improvement, whether or not you're doing well or you're doing poorly, right? These two things are the simplest ways to rebuild your confidence to pulling the trigger, even if you have a proven system. These are the easiest ways. And the reason I say that is because the only way I learned to be flexible, which I think is my greatest strength, right? If we're looking at strengths and weaknesses, I think my biggest weakness is sometimes I'll let a couple of trades impact the decisions I make for the rest of the day. Like if I've made a lot of money, sometimes I won't want to take any more trades, even though there are opportunities, or if I've lost money, I have less confidence in my next trades, right? I think that's my biggest weakness. My biggest strength is my flexibility, right? You guys saw it last Friday. I took one options trade, 2 futures trades, and then 1 common stock trade, right? And Friday was a big day for me. I made a lot of money on Friday. That's flexibility, being able to play different derivatives on both sides of the trade. Not many people do that, and I think that's my biggest strength. Now, the reason I'm saying that is because the only way I learned to be flexible is because I always told myself, right, I have nothing to lose if I paper trade this, right? Or when I finally did start using real money on a trade, like futures, for example, before I actually started trading futures with a full account size, I really did not use a lot of size. And even before that, I paper traded them for months. Okay, so if you're ever trying something new, if you're ever uncertain about something, if you're ever having trouble pulling the trigger, paper trade. So you guys will reach out to me and say, Ferris, you know, I'm having trouble building up confidence. I don't know why I didn't take that Netflix trade. I'm such an idiot. And you'll beat yourself up. And to be honest, I'm not your guidance counselor. I don't give a damn. I'm going to say the same thing I tell myself whenever I have that same issue. Smaller size or paper trade. All right. And again, I sound kind of harsh saying, oh, I don't care. But I do care about your success as a trader. I don't care if you missed out on money or if you didn't pull the trigger, because there's an obvious solution, right? And I ask you guys, well, send me over any paper trades. Send me over what size you used. And then the obvious go-to answer is going to be, well, I didn't paper trade it. I just kind of watched it go. Why not? Right? Why wouldn't you actually try and practice it? It's the same exact concept, and we relate these things back to sports all the time. Right, Steph Curry, one of the best three-point shooters all the time, arguably the best, right? But one of the best three-point shooters in basketball of all time. Let's say that this guy, first time playing basketball, stepped out on the court and tried to hit a half-court shot. Is he going to hit it? No. Well, maybe, Steph Curry, but no, he's not going to hit it. He's not going to make that shot. Reason being, he hasn't practiced it. Why are you trying to shoot a half-court shot when you haven't even practiced making layups? Right? Doesn't make sense. When you first go to the gym, you're not going to go throw 400 pounds on the bench press and immediately try to do that and just kill yourself right off the bat. Right? You're going to work your way up to that goal. So it's the same exact thing in an overall confidence level of working your way up to build that confidence by seeing it work. And that's the same exact mindset you use if you're joining a chat room. It's the same exact mindset you use when you're trying something new. You have to see it work before you believe it. I tell this to any trial member because we offer that free week trial, right? Whenever there's a trial member chat, I say paper trade the alerts and just watch this week, because there is literally no point in putting real money on the line before you've seen something work. I know my system works. They don't know me though, right? They don't know me. So I want them to see it work. And if you immediately trust somebody right off the bat without seeing it for yourself, that says more about you than them, right? So the go-to thing here, let's say, for example, TIGR, I'm unsure about this setup. The stock right here, right, broke its trend line and put in a higher swing low. Relative volume came in. It gave us a long scalp setup, right? Let's say I'm unsure about it. 2 things I can do. I can paper trade it, or I can use a smaller size. Okay, the go-to solution is using a smaller size. I still think the better way to do it is to paper trade. There are a lot of good platforms that let you paper trade through them. I highly recommend doing it through a platform instead of just doing it the old-fashioned way and writing it down. Mainly because, right, for TIGR, let's say that this stock broke out at 21.20. Right, that's about where it broke out at for the next leg. In this case, I would look at this and I would say, I'm in at 21. That's where it broke out, so that's where I would have gotten in hypothetically. But you didn't actually go in and pull the trigger and get into the trade. Right, so using the platform kind of holds you accountable for your entries and exits and is the best possible practice that you can get. So whether it's Thinkorswim, whether it's Speed Trader, whether it's whatever type of platform that you're using, make sure that you go through and actually pull the trigger if you are going to paper trade. Okay. The other thing that I want to say, and really this just goes with the whole being consistent versus trying to hit a home run, because that's the thing that really makes you beat yourself up the most, is not if you capitalized on a smaller gain and could have made more, but it's really whether or not at all you traded a home run. That was a very clean cut setup, right? That's where you start to kick yourself the most. And the thing that I always say is if you created a plan and you stuck to it, that's all that matters. Don't kick yourself for missing out on more gains. Don't kick yourself for not pulling the trigger in the first place, right? What matters is that you had a plan and you stuck to it. If your plan is to sit on the sidelines, follow it, right? For example, and this is one of the things that I think is a little bit more experienced, but it kind of goes with every single trading style. Let's say I'm a long bias trader. Say I play things on the buy side and I mainly watch large caps for options, right? For example, if I am watching the S&P this week and I could tell that the S&P is very, very choppy, I'm probably not going to take that many trades unless the stock is showing relative strength. That's the contingency that I'm putting on that statement, right? Because if I'm taking every single trade when there's chop, I'm just going to get stopped out. I'm going to get faked out. There's no incentive, right? So being able to adapt to these different market conditions, these different cycles, allows you to be more consistent and know when to actually trade and when not to. And that also builds up your confidence towards pulling the trigger, right? For the ins and the outs. Okay. But the easiest way to relate this, and the first question you ask yourself, is there enough risk to reward for me to get in? If you're not sure about the risk to reward, don't trade it. Okay. And if you do trade it, you don't have to use a full size. You don't even have to use real money. Sounds stupid, but this is the only way to get comfortable with it. And if you get comfortable with the trading style any other way, then you're lying to yourself, right? In the sense that you shouldn't be using real money. You shouldn't be putting real money on the line if you haven't seen it work. Okay? So some of you guys who are watching this, either a member or a YouTube video later on, right? Nobody's perfect, so you're probably watching this back and you're thinking, oh, that's me. I should paper trade, but I really want to make money. Paper trade. Do it. Try it out, right? It really helps build confidence, and you can see when you transition from real money to paper, you can see where the emotions impact your decision making, where you shouldn't have used a larger size or where you shouldn't have taken the trade, and you be able to say, and it's one of the best feelings ever, I would have been in this trade if I was using real money. But now that I'm paper trading and sticking to my plan, right, and practicing, I know that that's a stupid move and that I should not be doing that. Okay? But just to recap what we talked about here, because I don't want this to exceed 30 minutes. I think it's a lot for a trader psych discussion in general. For me, right, becoming a good loser was easily one of the more difficult parts. Whether or not I start the day off red and let that impact how I trade for the day, or whether or not I'm just not reflecting on my trades properly and focusing on my strengths just as much as weaknesses, I think finding a good balance of confidence is the goal here for being a good loser, right? Not letting a loss or a P&L or a dollar amount define your day or your week or you as a trader, right? If you lost money, that's fine. As long as you're learning from it, then you're good to go. Okay, your goal here is to survive. So you want to take big wins, small losses. You do not want big losses. Okay, if you do ever take a big loss, right, then you need to rewind and learn from it. If you don't learn from it, you will inevitably blow up your account. Right? It's the same exact thing if you're winning for the wrong reasons. Let's say I hit a home run on an options play, but it was for the wrong reason, right? In the sense that I had a bad entry, or I had a bad exit, or I shouldn't have played it in the first place. That's great. Celebrate. You made some money now. You're going to be broke in 2 weeks. Right? So you need to see your system actually work. It needs to be consistent in order for you to become a good loser and find that confidence balance. Okay? And then last but not least, fear of pulling the trigger. I can relate to this. It happens to me monthly. If you ever have a darker period or whatever, paper trade, build that confidence back up, then go back for it. Don't kick yourself for winning. Don't kick yourself for losing. Learn from it. Okay, but the easiest things you could do, use a smaller size, right? If you're playing with money that you can't lose, don't do it. All right, use a smaller size because a lot of times that makes you more emotional. Easiest thing you can do for that, by the way, just turn off your P&L. Don't look at it. Focus on the process, not the profits. Okay, smaller size or paper trade. All right, and that little tip, by the way, turning off your P&L box and whatever platform you're using, it's gold. Try it out. Try it out. It goes a very long way. Because if you're staring at your P&L and you're going, oh, I'm now down 200. Oh, I'm now up 300. Oh, I'm now down 1,000. That's going to make you make emotional decisions. That's it. That's the only thing that can come of it. Whether they're good or bad decisions, it's focusing on a dollar amount instead of what you're doing. Okay? But hopefully this helped out some of you guys. I know some of you are probably already reaching milestones with these two things, but for me, these are recurring issues. I always need to try to remind myself to be numb to losses and learn from them. And then also that my system works, I should be pulling the trigger. Okay, if you don't have a system that works, message me, right? If you haven't built up your system enough, let's find the roots of what's wrong with it and work from that. That's going to be your first step. That's going to be your concrete step. I can't just say something in a webinar and you automatically go, hey, I'm great. I should have more confidence, right? You need to take a concrete step, whether it's using a smaller size or paper trading, right? Or learning and reflecting on your trades a lot more to actually build towards this and train your mind to not be impulsive. Okay? A lot easier said than done. But if you guys have any questions, let me know. I'm going to wrap it up there.